Greetings, listeners. Howard and I spoke with a very special guest. He is the managing partner and CEO of an AmLaw 100 firm. Today, we discuss the firm's culture and approach to growth and talent acquisition. We discuss the firm's practices and profitability. So we discussed that and more. Enjoy. So welcome, everyone, to the Future is Bright podcast. My name is Chris Batz, and joined by my co-host, Howard Rosenberg. Howard and I are at the very center of law firm talent and strategic growth here in New York City and the UK. So stealing a line from my alma mater, Howard is a partner and the head of talent intelligence and acquisitions at Barrett & Brunel, and I advise and facilitate corporate law firm mergers at Columbus Street. And today, we have a very exciting guest, Mr. Stephen Zubiago, managing partner and CEO of Nixon Peabody. Stephen, welcome to the podcast.
Hey, Chris and Howard, great to be with you.
So, Stephen, your career spans over 2 decades at Nixon Peabody. What originally drew you to the firm, and how has your journey led you to this role as CEO?
Sure. So I came to Nixon Peabody at a great time to join the firm in August of 1999. I was a senior associate at another firm and wasn't happy with my career path and what my prospects looked like, and how my professional career was developing. So as I often do, I rely on my friends, and I met my friend Jeff Brenner in the street. He was at Nixon Peabody, and Nixon Peabody had just undergone a merger at that time to form a super regional law firm, and they were looking to grow and build, and it seemed like a great opportunity. And so I joined Nixon Peabody at that time. I was one of the first new attorneys to join Nixon Peabody after its merger to form that super regional firm in 1999.
And you're a trained healthcare lawyer, correct?
I am. I was assigned to that after law school. I clerked for an appellate court for a year and then went to a law firm. Wasn't clear on whether I wanted to be a litigator or a transactional lawyer. I was assigned to healthcare, and I've been really thrilled with that assignment. The healthcare industry is integral to our country. There's a lot of opportunity for legal work. I have found the clients and the practitioners in that area to be really forward thinking and collegial. And I was able to get some expertise, grow a client base, and have an impact in serving clients in healthcare. So very, very proud part of my career.
So, Stephen, let me jump into kind of your role as managing partner and CEO. And this is again, Chris and I kind of talk about growth and talent in a big way. So I'd like to kind of get your thoughts on what's been your kind of long-term vision for the firm's growth, and how has that kind of evolved over the last couple of years?
Sure. So the core of everything we do at Nixon Peabody is based on what our clients need. And that's always our primary consideration. But switching to your question about talent and growth, so in order to serve clients, first the firm needs to be at a certain scale and size. It has to have a certain amount of depth, and of course has to have a certain amount of expertise. So while delivery of high quality legal services and servicing clients is our ultimate focus, one of the most important components of being able to do that is having a strong growth plan and being able to attract and retain good talent. So on the talent front right now, we're growing the firm. I've been the managing partner for 5 years, and when I started, we really reaffirmed our commitment to expanding our depth and our breadth of practice. So by depth, I mean our industry depth, the deepness for which we understand legal issues and can respond. By breadth, I mean expanding those services. We're not trying to be everything to every client. What we do is we have a bunch of core practices that we think we're really good at. We try to build those up and make them deeper and stronger, and then we'll take on practices that are additive to those practices. And of course, all the specialties that support that.
So, Stephen, which areas specifically in terms of practice areas or industry sectors do you think is the firm kind of going for growth in a big way? Which ones of those are priority ones for you guys as you kind of continue your growth?
Financial services. We do a ton of work for banks and financial service industry. And it's very specialized work. We have a great corporate trust practice. We have a great tax credit practice. We have a great specialty finance practice. Of course, some general finance as well. Another one would be real estate and affordable housing. We do a ton of straight real estate work throughout the country. And within that group, a real specialty of the firm is affordable housing. We have a nice match of regulatory state and federal regulatory expertise in affordable housing, as well as tremendous deal making capacity. Another industry would be healthcare. We have a long tradition of representing a range of healthcare providers. Over time, that has evolved to do more and more work for-profit providers and private equity. We've got a big transactional component in our healthcare practice as well. A fourth industry would be technology. A range of services, intellectual property is something that's strong for us. Corporate, regulatory, strategic planning. Other industries we focus on are consumer and industrial. So those six are really our highlighted industries.
And what about the size of the firm? Are you happy with the size of the firm in order to compete effectively in the market across all those industry verticals that you mentioned?
Yeah. So size in all professional services, especially law firms, has become an issue that managing partners need to think about and position yourself in the market. So here's how we think about that. Um, we need to bring sufficient talent to first retain and service our client base. Then, second, we need to have the right talent so that we're growing and attracting that work. As our firm has evolved, we are very committed to increasing the size of our firm, and we're in the process of doing that. We had 17 lateral partners last year, and we increased the attorney headcount by 62, which was about 10%. We're approaching 650 lawyers now. The question of what's the ideal size for a law firm is an interesting one. I guess I will say we are committed to growth, not for growth's sake. I want to be very clear, in order to ensure that we have the right talent and the right specialization to meet our client needs and to position ourselves to grow with those clients and attract the type of clients that we want to represent. We are aware that scale brings certain advantages financially and otherwise, but of course we balance that with the need to ensure that our firm has great culture, that our attorneys know each other, especially our partners, that they put the firm first, that they put the firm clients first, and they buy into kind of our vision and strategy. And it's always a delicate balance, between growth and maintaining that. I've been lucky to be the managing partner of this firm for 5 years. I feel real good about how we've tried to measure that balance. We've definitely improved our firm and brought good people in. We've also, I want to quickly add that we're self-promoting and our talent is improving. We spend a lot of time on internal training. Our associates make income partner. Our income partners make equity partner. They develop client relationships, and they're thriving in their professional life. So we're combining all those factors together.
And what are you seeing in the marketplace? Because you must talk to your other managing partners of other law firms. You're all competing for talent, as you just indicated. I just was wondering, like, where are you on that matrix? Because there's the onesies and twosies, there's the teams and the groups, and then there's obviously firm combinations. You must kind of have an idea of how to kind of propel the firm going forward on that kind of basis.
Yeah. So we're very open-minded on all those opportunities. First, as a firm, we spend a lot of time training and supporting our existing talent. Right now we're having a senior associate training in New York City, where all our 6th, 7th, and 8th years are receiving intensive training from firm management and some outside consultants to help push them along in their career. We do that for our younger associates as well. We also train at the partner level. Our income partners get training, and in fact, between associate and income partners. Often our attorneys become counsel for a year. In that counsel, they receive intensive training to prepare them to be partners. That's been a very, very successful endeavor for us. Then moving to the outside forces, which was the thrust of your question, we pursue all the strategies to bring high quality lawyers and people into our firms. We recruit on a onesie and twosie basis for both associates and at the partner level. We're very interested in talking to groups. And as a firm, we've made a decision to be open-minded about what M&A opportunities. Again, balancing what our clients' needs are, what the needs of the firm from a breadth and depth perspective, and then, of course, balancing that with the importance of our culture and having a firm that's the size and operate in a way that our partners are all comfortable, and we have those conversations regularly with our partnership.
So Stephen, I know Howard mentioned this, and I know it's very, very aware of the amount of competition out there for talent. And certain firms have been on a tear, just writing checks and hiring talent. What differentiates Nixon Peabody from the rest? How are you attracting this talent?
Sure. So let me acknowledge, especially in major cities throughout the world, the top of the AmLaw 100 are competing for talent with a level of energy and financial support that's never been seen before in this industry. The competition is at the highest level. We as where we sit in the market, and I want to be very clear, our clients are very comfortable with this, and our and my partners are comfortable with this. What differentiates us is the ability for people to come to our firm and thrive and succeed. What I say to lateral partners all the time is there are certain firms, and there's nothing wrong with this, that it's a sound strategy. The firms have a certain strategy, and the partners and all the attorneys in the firm have to figure out how to fit within that strategy. Our partnership is much more open and collaborative. We had to decide on that strategy together. And I like to say that Nixon Peabody is successful because our partners and our attorneys are successful. And that's a very attractive mindset and thought for a lot of attorneys in the firm, where they can come to a firm that will listen to them, that will try to understand their uniqueness and their practice. And if it fits with the overall strategy of the firm, support that. And we've had a lot of success. We bring in a lot of people from from bigger firms, and we also have a lot of people join us from smaller firms. We have people join us from government or in-house positions and transition into practice and be successful. And I think it's our flexibility and our open-mindedness. You drive your career here at Nixon Peabody. There's no doubt about that. You have to take ownership of that, drive that. But the firm brings intensive support, and I've got to say, and my partners bring intensive support. They understand what we're doing. They understand how it's successful. They support management's endeavors in this regard, and they support people that join the firm.
So, Stephen, just going back kind of to the market forces that we're all kind of working in, I was wondering, how do you and your partners feel about the increase of private capital coming into the business? And is that something that you and your partners are kind of open to considering, given kind of the growth plans and the aspirations of the partnership?
Sure. So, private equity is investing in all kinds of service businesses. They've made great inroads into the accounting profession, and are rapidly rolling up accounting firms and consolidating that industry. The legal profession has been much slower to adopt that. There's some things going on in Arizona right now, but it hasn't been widespread. Like most law firms, our size, we've been approached by private equity. I think right now our partnership is very comfortable with our existing business model. We're always open to what's going out going on in the market, but that's not something I see us doing in the short term.
It's interesting. You guys were approached by private equity. Has there been a thought about, or the challenge, because the whole argument in the CPA industry with private equity is capitalization. And so that professional service firms, as an argument, are undercapitalized with the growth of technology and the reality of talent, the race to talent, and then this reality of the partnership model. And that could potentially, the argument could potentially say the partnership model is antiquated. And there could be a shift towards what could be more of like a Goldman Sachs model, or a model that continues to leverage capital for growth. I would love to hear your thoughts as you guys maybe process that with your partners.
Yeah, no, Chris, excellent question, and all those factors that you mentioned are in play. I guess I would start with the partnership model. While certainly not perfect, we have been able as a partnership to react to market needs and what our clients need and be flexible enough to do that. And we haven't felt hampered in that regard. Does the firm need to achieve a certain level of profitability to retain our talent? Absolutely. Does the firm need to achieve a certain level of profitability and scale to be able to make the investments that we need to make? Absolutely. But we're comfortable and confident that we're doing it. If those factors change, would we have to consider another model? Sure. I like to tell people that for an AmLaw 100 firm, we've got about 1,300 people that work here. More than half of them are lawyers. We're still one of the flattest organizations known to mankind. People have an issue, they can get through my team and get to me pretty easily, and people still like that about the firm. Now, if we were bigger, would that be more difficult? Sure, but we would manage that over time. But I guess the point is we haven't felt hampered. And I'll be very direct here. So if we had more capital, could we add more talent? Arguably, yes. But is that talent we want? Is that talent that fits with our culture? Is that talent that moves my firm forward? Is that talent that the rest of my existing partners are going to be able to be comfortable with and swallow? So all those are in consideration. These are healthy discussions for any growing organization. But I want to be clear. While these challenges are there, my management team and our partnership, we haven't felt hampered because of this.
So let me ask a follow-up question to Chris's question, because as you're running a full-service law firm, AmLaw 100, there must be certain practice areas that are under enormous pricing pressure in this marketplace. How are you addressing that as you continue to grow? Because as Chris says, the partnership model doesn't really kind of take that into account so well, right? Because you have different pockets of profitability across the firm.
Yeah. So look, there's always rate pressure, and it exists at different levels, and with different clients. We do have like at all firms, there's differing levels of profitability and differing levels of rates that can be commanded by different practices. So one of the things is we've tried to narrow that range over time. And so there's a certain type of client that just doesn't fit for our firm. They're a fine client, and there's other firms that would service them, but it doesn't fit for our firm. And as we move forward, we're very careful to focus on those areas that do fit and to de-emphasize those areas that don't fit. And one of the things I'd like to think we do a good job of, you can always do better, of course, is being really clear with our people about what that means. The other thing is, obviously this all goes to firm performance and ultimately compensation, especially at the partner level. And we do have some processes in place that we've had for a long time. We know what practices are more profitable than other practices. And obviously we try to emphasize and nurture and support the more profitable practices. But that doesn't mean some less profitable practice, they can be important too, and they can be supported. And in our compensation process, we take all these factors into account. The more profitable practices, obviously, the partners are earning more. The less profitable practices, the partners are learning less. But in that process, not only do we think that's a fair way to compensate people, the real magic in that process is being clear and helping our partners understand it. And we've had many practices and partners that were in, lower margin, less profitable areas, and we take very seriously our obligation to show them a path to higher if that's what they want to do, and that's what the clients can do. And we've had a fair amount of success and having practices move up and be upscale. I'll give you an example. So I was bragging about our affordable housing practice earlier, and I'll continue to brag about it because we got a really strong practice because we're industry leaders and we do it in scale and we do it in a large way, and we have figured out, and there's a lot of clients. We represent a ton of nonprofits in that area, and they realize the value and the depth and the scope they bring, and they are they are willing to pay, strong rates to get that and move their organization forward, and that's something we're really really proud of.
Do you think that there's a future scenario where some of those practice areas that are under kind of cost pressure, the idea is that you carve those things out, maybe they're ancillary to the firm, they get a dollop of private equity, load it up with technology, and it's just done in a different way with a different caliber of people at a different price point. The firm may still own a portion of that business, but it's operating outside the ecosystem of the main firm.
Yeah, so that's a very MBA approach to our business, Howard, and a very very rational one. Um, I, I I don't see that happening in the short term. I see us continuing to, our firm has been successful because we've tried to understand the markets in which we operate, the industries in which we operate. We bring the talent to maintain our clients. We grow that. Where practices need to be improved, we've been able to do that. Some fall by the wayside. Um, we've been able to do this in a way where we haven't ever gotten to a, kind of what you described as a reckoning point. It just hasn't evolved for us that way. It might at some point in time. It absolutely might, but I that hasn't happened yet.
Yeah. So, Stephen, we've had an eventful 6 months for law firms in the United States that might have been a little out left field. And um, without really addressing that elephant in the room, I'd love to hear your perspective for our listeners about the next 5 to 10 years. What are those opportunities that you see for your firm? And potentially, kind of what's the stuff that's keeping you up at night? What's that black swan albatross that kind of like what just happened 6 months ago or 3 months ago? So curious if you could share us a little bit of what's going on, how you're thinking
Sure.
about the world.
Sure. Appreciate the forward-looking question. But, I will say, just about the last 6 months, we found that was a great opportunity for us to come together as a firm and discuss these issues. Our fiscal year ends the end of January, and I had pre-planned with members of my management team to get across the entire firm and give the state of the firm presentation. And that presentation got revised as things were happening in March and April. And I had a real opportunity to talk to everybody in our firm staff, included about national issues that were facing the legal industry. And while certainly there was some impacts and it wasn't smooth, I think as a firm, we really welcomed that opportunity. I was thrilled to be able to have a chance to talk to everyone in our firm, kind of set forth how we're thinking about it and what our positions, take input from people. And I really do think it's helped our firm emerge, even stronger. So I think we're better for it. We're very excited about the future. As I mentioned, the firm had a strong year in 2024. We added to our talent. We continue to do that this year. While there's some financial headwinds in the markets and there's some instability in the world, those things always exist. Our clients are busy. Our clients are still using us. We are having a nice year. So we feel really good about that. There's a couple of things going forward that we think position us well. I'll start with some rudimentary things and then get a little more complicated. So one of the things we as you look at our firm, we're spread out over 11 offices, basically 6 offices in major metro markets. Those offices, the metros, are all roughly the same size. So before COVID, we always worked cross office. That was just something we did as a firm. There wasn't a New York City real estate team. There wasn't a Chicago real estate team, a Boston healthcare team. We always worked across offices. And when COVID hit, and that was jarring to some people that worked in a different model. It really, obviously people not being able to come to the office was a hit, but in terms of how we worked, people transitioned super smoothly because there's no difference between zooming from your second bedroom or your kitchen and interacting with somebody like you did prior in a different office. As we emerged from COVID, I became managing partner at the start of 2021. So right in the heart of COVID. COVID was we were a year into COVID. So we did some surveying, took some input, and the feedback was absolutely all over the place from our workforce, just in terms of what they wanted to do. But we felt like we were serving our clients, we were having success, and so we really embraced remote work and specifically flexibility. And so we've got pretty progressive remote work policies. Our usage of office space has stayed the same over the last couple of years. And we really think we're building a firm and a workforce that's ready for this modern world. Uh, uh, People being engaged, being enthusiastic, showing up when needed, but also enjoying, that flexibility. Right now, our expectation is that attorneys come into the office 2 out of 3 days on Tuesday, Wednesday, and Thursday. We have a bunch of people that come to the office on Fridays and Mondays, and we have a bunch of people that don't. And what we found is our productivity has stayed the same. I think our retention has improved over coming out of COVID, of course, has improved because people feel like they have more agency and more flexibility. And our client response to it has been just great. So we think that's one thing that position us going forward. A second, as I mentioned, the industry focus. We've got many great niche practices. I think we could do a better job, like all firms, of communicating that to the outside world and really leveraging that and showing that and showing that to our existing clients and improving our client base. So that's something that we're very excited about. A third thing, of course, would be artificial intelligence and the changes that that's bringing to the delivery of legal services. Our firm's got a lot of smart, open-minded people, and I'm pleased with the attention that we've given that. We embrace it. We think it's going to open up a lot of great opportunities for delivery of services. Will it do some of the things that lawyers do? Of course it will. Those kinds of disruptions have occurred in our industry in the past. They're occurring now, and as a firm, we're really embracing them, and moving forward on that. And then I guess one more. My overriding point is, we've gone through COVID together as a firm. We've grown our firm, improved our profitability, brought new people into the firm, made them a part of our firm. We're coming through all the disruptions in the legal profession that you referenced in the beginning of the year, and yet we continue to attract and retain good clients. They continue to use us. We continue to grow our client base. We continue to retain our existing talent. We continue to bring new people in the firm. And so that's got us really excited about the future. Bring it on. We're ready.
So, Stephen, bringing this to a close, how can people follow you on social media?
Sure. So I'm on LinkedIn, and I'd be glad to have people reach out to me in that venue.
And Stephen, it's been an honor and a pleasure. Thank you for your time today.
Yeah, I appreciate it. Great questions, and I enjoyed this conversation. Thank you both.
Thanks for joining us, Stephen. Appreciate it.
Great.